Welcome to Trade Treasury Payments, the podcast unlocking the future of cross-border finance.
From transaction banking and money movements
to liquidity, treasury, and cash management.
We bring you expert insights and the latest trends shaping global finance.
My name is Dipesh Patel, editor at Trade Treasury Payments. It's been an interesting year, 2025, for digital trade. And in today's wrap-up, we're talking about how we can build trust through identity in digital trade. A lot's happened, including the Commonwealth's introduction of the model law on digital trade. Trade finance registries have also had the spotlight, particularly in Bahrain. So today I'm delighted to be talking to two experts who are going to be discussing legal harmonisation of trade documents, the role and importance of digital public infrastructure, and some of the practical pathways that governments, financial institutions, and development actors can do to come together to create policies that are inclusive and drive digital trade. So with that in mind, I'm delighted to be joined by Vashti Maharaj, Advisor for Digital Trade Policy at the Commonwealth Secretariat, and Neil Shonhard, CEO at MonetaGo. Welcome both.
Thank you.
Thank you, Dipesh, for having me this morning.
Thank you very much. So Vashti, I'll start with you. 56 Commonwealth countries, and the Commonwealth has only recently released the model law on digital trade with the accompanying guide to enactment. In simple terms, what's the problem statement that the member states were asking you to solve?
Well, what we see is that across the Commonwealth, member states are really interested in pursuing digitalization to increase transparency, reduce trade costs. However, one of the greatest challenges is that many of them are grappling with antiquated legal systems that do not recognize electronic documents, electronic processes. The model law on digital trade is something that is intended to align with international best practice standards such as MILITA and the other UNCITRAL laws, but also provide a simple guide and way in which countries can really leverage digitalization through legal reform. One of the things that we sought to take advantage of within the Commonwealth is that Commonwealth member states have a Commonwealth advantage. They have a similarity in legal systems based on their historical legacy systems. And therefore, it is very easy to really get that traction in allowing everyone to have that common standard for legal principles. And it can therefore create legal corridors and really maximize on how easier it is for member states to do trade with each other by simply pursuing legal reform. Actually, Dipesh, one of the things that we did before working on the Commonwealth model law is that we did a detailed study on the quantitative analysis of the move to paperless trade. How can we really benefit member states? And through that study, it was identified that legal reform to support digital trade can increase benefits to $1.2 trillion across member states. And it is based on this that we have really sought to undertake this initiative.
Thank you. And Neil, you've worked across many markets adopting MLETR, the model law on electronic transferable records, that is, and similar reforms. From your perspective, I guess, what does the Commonwealth model law on digital trade bring to the table? And do you believe that this is something that can accelerate the implementation rather than just a legislative change for the acceptance of digital trade documents, which, let's be honest, has been a conversation that's been happening for several years now?
Dr. Shirley Butchray and Vashti and the other people at Commonwealth have obviously got a very different perspective from us in some ways. MonetaGo goes country by country, and Vashti's sort of has a perspective of multiple countries across multiple jurisdictions. And let's take the Commonwealth Summit in Namibia earlier this year, 1/3 of Africa being Commonwealth member nations. even with MLETR, there's still fragmentation of other policies, laws, and so on. So the Commonwealth model law is far more encompassing and solves for fragmentation by standardization of rules across digital documents, identity, control of assets, bringing confidence, not just domestically, but also to move things across border as well. And sort of unification of those legal principles is very important, much at a higher level than just any one country as well.
Thanks. I guess legal recognition is one thing, though. Adoption is a completely different thing. Vashti, what would you say are the most important capacity building or policy steps that are helping some of the smaller or resource constrained Commonwealth economies to move from legislation to usage?
Well, some of the gaps that we definitely see is that while many of the small island member states, as well as developing states and least developed countries within the Commonwealth, do understand the importance of legal reform to support digital trade, they have capacity constraints. And this is where we come in. We provide dedicated technical support and assistance to member states in undertaking their gap analysis, taking the economic analysis, as well as developing the requisite policies and legislation to really move it past that line. One of the things we also recognize, and we are very clear about, is that the development of the legislation and policy framework is just the first step. Implementation and adoption is where you will actually see material advantages. And in this regard, we do work with our stakeholders to really promote sensitization, to promote greater integration in terms of the law, particularly with the industry. That is really the ones who are going to drive that trade digitalization. And in that regard, this has been our approach, and we will be pursuing that in the upcoming year as well.
So you've just come back from St. Kitts and Nevis. Can you talk about, can the nation implement this model law? How will it actually benefit some of the organizations there?
This is an excellent example. St. Kitts and Nevis have stepped forward as the first Caribbean country that is very much desirous of piloting the Commonwealth model on digital trade. And the reason being is that their government is very forward-thinking. They are in the process of digitalizing a lot of their processes. They are about to set up their single electronic window for trade. They have already started the implementation of their port single window, and there's multiple initiatives that they're taking across the government to really support digitalization. They understand very clearly that legal reform is a key imperative in moving ahead. And coming out of that, we also see that adopting that can also put them as a regional lead. Other countries can look at the benefits that accrue through this process.
Thank you. And 11,000 kilometers away, Bahrain, they've just announced a national trade finance registry project, and Neil, of course, involving MonetaGo and some other partners, FinTech, Bay, Benefit, and Central Bank. For those who might not have seen that story, first of all, Neil, what does a national registry actually do for lenders and SMEs in that particular market? And then part two of that is why does Bahrain matter? And can you talk about that story, please?
Bahrain's economic vision, their 2030 statement, talks a lot about financial inclusion, SME or MSME, liquidity, economic growth, which all three things are very much aligned. And they've been looking for ways to catalyze that. As I'm sure everybody on this call is very aware, I believe Bahrain was the first country to enact the MLETR legislation. And I think that what they've tried to do outside of that is how can they catalyze more trade with, these kind of things already being in place. So they've come to us and we've decided to partner with the national payments infrastructure provider, That's the benefit company. That is a consortium of around about 20 banks, both the main domestic banks and some international banks. And we will be doing a sort of public-private partnership to deploy digital public infrastructure, starting with a fraud prevention registry. The registry gives lenders a single trusted source of data to see whether a trade finance transaction they're about to commit to has been financed or is owned by someone else. This then lowers fraud losses and consequentially grows the appetite for people to extend more finance or lend more. Bahrain matters because now you've got a market where there is regulator and industry alignment in what is a compact market, and this will see very measurable change very quickly. And that's already, we've got conversations with other GCC countries, but Bahrain is ready to move now. And we are also in alignment with something that when the news first came out, this wasn't public, and now I can speak about it. Bahrain has set up and established a development bank, a national development bank, Bahrain BDB, and their mandate is to quite simply only catalyze liquidity to micro and small businesses. And we're very much in alignment with all of their goals. So very much this is sort of a top-down and bottom-up push. So this means that we've got, the state are very much behind the initiative. That's the central bank, the EDB, Bahrain Economic Development Board, and benefits ultimately. And then you've got the banks, and that's sort of BBK, MBK, and the rest, because they are looking for ways to grow their economy, grow their books of business. So what does that mean? 95% of businesses in Bahrain or more are SMEs. Only 11% of them have access to finance. Okay, they are all the banks are in alignment that a trade finance registry will unlock liquidity, prevent fraud, and empower SMEs, which is a backbone of their economy, clearly, with those statistics. And again, sort of this bottom up and top down alignment. One of the statistics I think is really impactful is that in 2004, oil and gas made up 30% of the nation's GDP. And like many other GCC countries, they've moved to trying to move away from oil. And whilst the oil and gas sector hasn't shrunk or retrenched, it's still the same size, by 2024, financial services became the largest sector at 17+% of the GDP. Again, while oil and gas still remains strong, but to continue that growth with a very dynamic, innovative, strong financial services sector, this is a great way to promote more lending by removing the fraud, which will have a knock-on effect of economic growth. And this is, any market should be doing this. Obviously, we are across multiple jurisdictions and with proven success in global markets, but we're very proud to bring that expertise and DPI to Bahrain, together with the state and everyone involved at Benefits and Bahrain Fintech Bay. Bahrain Fintech Bay have been incredible in realising the opportunity that this would bring into the country as well, all while supporting the Kingdom's economic vision in 2030.
Hey, enjoying this podcast? Hit that follow button for more. Done? Let's get back to it.
Vashti, is this a good example of public-private partnership in your opinion? And how can projects like these make trade, I guess, more simple, reduce the fraud? Would you say a trade register can also complement those model laws, such as the Commonwealth model law on digital trade, to reduce some of those frictions, to reduce fraud and make trade simpler?
I think it's an excellent initiative and can serve as an example to many other member states that really want to move from paper-based and manual processes to fully digitalized processes that really unlock trade finance for SMEs and MSMEs. In that regard, Bahrain is not singular. As with many countries, a large percentage of businesses are MSMEs, and they have the greatest challenges in accessing finance, and ergo therefore hold back a significant sector in your productive economy. I think by having that register and to show secure transactions, therefore, you are now able to really make unlocking finance a lot easier. No longer do you have to go through complex, detailed manual processes, but you're able to have everything digitalized. The documents are there, literally easy access to finance. The other thing that really is a game changer, one of the greatest challenges of manual-based processes is not just the length of time that it takes to complete a transaction, but the level of informal costs that arises out of corruption and fraud. That actually is one of the silent killers in your economy. And by, digitalizing this and making this into a transparent registry, you're able to pick up on vast losses to the state from fraud. And so I think it serves as a dual purpose. It unlocks trade finance, but it also eliminates a lot of income that would have otherwise been diverted towards fraudulent activities. And it also creates, I dare say, it creates a regime for greater investment. And how I say this, by having a transparent regime, investors are more willing to do business with your country. You show that you're transparent, you show that there's an ease of doing business, and that there isn't a high degree of fraud that they will now have to go through a lot of hoops in terms of KYC and AML and compliance requirements by doing business with this country. It makes it easier to do trade. I see it as a winner all around. And what I will say is that this serves as a good example to many countries, not just countries that have the systems in place to be able to now use the trade registry, but countries that aspire to, countries that are now initiating their digitalization process. It provides a blueprint. They don't need to make the same mistakes. It provides a veritable roadmap. And in this regard, I'm very pleased and happy to be working with MonetaGo. We are looking at countries across the 56 member states where this can be transitioned or piloted. And I look forward to great things in terms of public-private sector partnerships in the upcoming year.
Neil, are you able to go into any more detail on the Commonwealth MonetaGo relationship and what areas you are exploring right now?
Let's talk about common alignment. And I think to come back to the GCC quickly, the Vision 2030 statements and the developmental narrative contained in those of SME inclusion, financial inclusion, SME empowerment, increased liquidity, and so on. What country doesn't want that? From the UK to the US. And the US is a great example of someone that's had essentially an analog system in a digital age to prevent fraud, and we've seen what's happened there recently. It's nearly cataclysmic. We don't yet know the scale of retrenchment in finance that will happen in the trade and the finance scene, and that's they're exacerbating their own trade finance gap by having poor infrastructure. Taking this into developing markets is much in alignment with goals of ourselves, the Commonwealth, and the multilateral development agencies that both Vashti and I speak with regularly. And there's some jurisdictions that we both are looking at right now. Africa's obviously one. It would probably there more than anywhere have the most real impact and return on investment in a very, very short period of time. We can stand these registries up in a matter of a few months, like in 3 months, and the banks can start to use them very quickly. And that then can move on to collateral registries and other digital public infrastructure. But why wouldn't a bank want to know that they have singularity or ownership over an invoice if it's being used as collateral for financing? It's a no-brainer, providing integrity to any country, big or small. Yeah. So we're very excited about that.
Neil, do you think that these registry implementations could shift lender behavior?
So I can't necessarily talk about the statistics in any granularity, but I will say that in India, both the usage of our system and the level of MSME liquidity through financing extended to MSMEs in India has grown at 200% every year, basically, since we've been there. And that's really notable. We're talking tens and tens and tens of billions of dollars each year to micro and small businesses in the India ecosystem. It's huge. In Singapore, our system has nearly equal measurable growth over the years in terms of usage. There's two types of usage we can talk about. One is obviously the fiat amount that's extended or checked through our system, and the other one is obviously the amount of documents that we check. One is more, depending on the nation, for sort of traditional trade, LC, commodities. One can be for MSMEs. But every single registry we've ever stood up has had increased usage month on month since implementation.
Thank you. Let's go on to New Year's resolutions as we wrap up what's been a tumultuous year in 2020 and look forward to what 2026 brings. Vashti, I'm going to start with you, if you don't mind. Let's talk about what your New Year's resolutions are for trade development and digital trade. Because what would you say is the one thing you want developmental partners, governments, ministers, and regulators to prioritize in what is a very long, increasingly long, in fact, priority list to grow inclusion, to grow trade in a way that is inclusive for all?
I would definitely say that, I would love to see greater integration and collaboration of our efforts to promote growth and prosperity among member states. One of the things that I've been very fortunate to do is work with a lot of developmental partners to promote legal reform and digitalization across Commonwealth member states. And I think we're all on the same page in terms of the benefits. It is how do we come together and move forward together to really benefit member states, to unlock greater trade digitalization, create those veritable trade corridors, and really do harness the benefits of digital transformation through the use of new and emerging technologies, such as the one that is really being advocated by MonetaGo, to really unlock greater benefits in member states.
Neil, if you had to pick one global development in 2026 that will materially accelerate global trade adoption, assuming that is your New Year's wish, what would it be?
One material wish that would accelerate digital trade. I believe that we are at a stage much similar to the sentiment of Vashti's comment, where we know what's worked and we know what's not. Okay, so MDBs, global trade associations and intergovernmental agencies alike can and should align both on funding and initiatives to deploy solutions that have already been proven in markets. There's a lot of fragmentation across individual continents and the world on solutions providers, ideas, initiatives, proof of concepts, and all of that delay. It's going to continue if we don't change our mindset. So that would be, alignment both in policy, initiatives, and funding would be my professional resolution. And from a personal perspective, I hope that in Q1 I can train our new puppy better to eat less of our shoes.
Thank you very much. Well, you've heard it here first, whether you're a regulator, a bank, a non-bank, a tech provider. You've heard some of the challenges we face, some of the continued headwinds from the geopolitics, fragmentation, fraud, even mindset challenges. I guess to all of our listeners and viewers, how do you want to shape 2026? What are your New Year's resolutions? How are you going to explore collaboration, new partnerships, addressing some of those challenges head on to drive prosperity and growth in 2026? Wishing you all a prosperous and happy New Year. Thank you very much, Neil and Vashti. See you next year.
And don't forget to follow Trade Treasury Payments
on your favorite podcast platform.
Thanks for listening.